Hi, ladies. Welcome to week 2. We are going to go over tax forms and documentation. Just like week 1, you do have a couple of quizzes in here that we're going to go over. Of course, we have our agenda for this week. So I'm going to introduce you to the key tax forms. Of course, are your 1099. I'm saying this all out of order. 1099 W-2 and your 1040. And your 1040 is your main tax form. You can't file taxes without this 1040 unless, like I was talking about last week, unless you're doing corporate and big business and nonprofit taxes. But these is our basic taxes, and we're going to always use the 1040, even for our small businesses if they are not corporate. So then we're going to understand the supporting documents, which are our receipts and our bank statements. We're going to go over the filing requirements and the deadlines, which we went over that some last week, but of course this ties into what we're going to talk about today. And of course, we're going to do a small recap. And we didn't do it last week, but this is up to y'all if we do the discussion of the tax documents and y'all experiences with tax documents. All right, so your detailed topics. I'm going with the tax form. Your 1040 individual income tax return is a primary form used by the U.S. taxpayers. All other countries do file taxes, and we technically could file taxes in other countries, but of course, we'll have to learn their tax laws as well. So that's why it says U.S. taxpayers, because we do have foreign tax forms on here as well as for our individuals that work in other countries, but actually live here. So we do cross mingle with other countries. Then you have your W-2, which is your wage and tax statements. Of course, our employers give this and give us our annual income. And then we have our 1099 series, which are a number of different forms that give us our different wages. And we will go over what the 1099 forms are and how they're used and who all receives them and who don't receive them. All right, so our 1040, of course, has our personal information as in our names, address, social security numbers, our filing statuses, which we went over in the first one, which is our single, married, head of household. And of course, you have your qualifying widower. Then you have your income, which is the detailed source of your income as far as your wages, your dividends, your interest, and your business earnings. That's where your Schedule C comes in at as far as your business earnings. Then you have your adjustments to income. It's a list of adjustments to reduce your taxable income, like contributors to retirement accounts. So that would be a 1090R, if I'm not mistaken. But those are for our individuals that take out in their retirement fund. They'll receive that, and it will either make or break them, as well as our student loans. That's a 1098T. They'll get that at the end of the year if they were full students or even part-time students, but it'll determine what their credit is once they get that form and we put it into the computer. Then you have your deductions and your credits, which will allow you to itemize deductions or your standard deductions. Standard deduction is automatically given to everybody that files taxes. And it's just to try to help out your liability. But then if you itemize, which you go through all your different assets, any medical bills, any taxes that you paid outside of what is it, 12,500 that they automatically give us, then you can bring down your tax liability that way as well. Tax calculations, calculate the total tax owed based on the taxable income applied to your credits. I don't know their name. Who that? Who just entered? I don't know that.
I think I have it on there as my middle name and my mom's last name, but it's Dejane.
Okay. All right. I gotta know. I'm a paranoid individual, darling. I don't like strange names, especially people I don't know. All
No, you
right,
good.
we
I just
good.
haven't used this Google Meets in forever.
All right, you good. Where we at? Payments, documents. Stop laughing at me. All right, so you got documents, any tax payments already made. So with that being said, say if you're a small business owner, we can make quarterly tax payments throughout the year as a 1099 worker. I think I brought it up last week. These little receipts will be sent to us at the end of the year, but that's if we go into the system and actually make payments. So that's what that is referring to. Then you have your refund or your amount owed, which determines whether if you the taxpayer is entitled to a refund or if they need to pay the IRS because they didn't pay enough taxes out. Majority of our clients that are in my system right now, we have figured out how to help them keep from having to owe. Um, but that goes back to asking those qualifying questions, which are on y'all job form. I don't know if everybody has had a chance to look at their job form and make their job form. So you are aware what questions are on there so you can be familiarized with them prior to tax season. You don't want to wait until tax season and then try to put everything together. I try to give it to y'all early so you'll be fully prepared. So when I start going over stuff, you're not foreign to it. Um, but then, of course, you need your signature of your taxpayer and the spouse's signature, especially if they're jointed, just to send off their tax forms. There are other tax offices that will allow their tax tax preparers to send forms off without signatures. That can bite you in your butt. I don't play those type of games. I need signatures because at the end of the day, your name is attached to it and my business is attached to it. So to keep from seeing that old Neona, we just gonna play the game right and we just gonna do what we supposed to do because ain't no reason, and this is how I look at it. There's a lot of tax offices right now that are screwing over their tax preparers. I end up getting 8 tax preparers in the middle of tax season because the person that they were up under was screwing them over. So, so with that being said, I don't want to get screwed over by y'all because I'm not going to screw y'all over. So all I ask is y'all just do what I ask to make your money keep coming in and you don't stop my hustle so it doesn't stop your hustle. That's all I'm saying with that part. So you got your W-2 wages and tax statements, which will include your total earnings, your federal and state. In some states, you have local income taxes withheld. You have your Social Security and your Medicare taxes withheld, and you have your retirement plans. All this you will see on your W-2. I do have, so I don't know if y'all have paid attention to it, but when you look at your W-2, you have box 12. If you've ever used box 12, or even if you're a tax preparer and you've seen box 12, sometimes box 12 has a number in it and sometimes it has a letter in it. I have taken the initiative to break down each meaning of each letter that's in box 12 as well as box 14. So you have an understanding of what your client actually paid out through the year or what they paid into through the year. So when your client be like, well, I don't know what this is right here, you can go back and look at your notes and say, well, you have letter. I'm just gonna throw a letter off the top of my head because I don't have a memorized. That's why I gave y'all a cheat sheet because I need a cheat sheet. So you got letter W on there. So you let them know, like, hey, W is because of your retirement form, your retirement payments. And this is the amount that you paid into your retirement. So they have an understanding. The whole key of being a tax preparer and being a reliable tax preparer is to be able to educate your clients so they'll stay with you because they can go to TurboTax, they can go to all them other companies and get their taxes done with no problem, making them feel comfortable being with you by you educating them. So my goal is to educate y'all. And it might seem like, well, why you ain't just giving us the basics? Just show me how to put the information in Because at the end of the day, how are you going to educate them if you don't know what's going on yourself? Like that's pointless. Is if I just needed data entry people, then I'll just say, here go my tax client and here, put it in. That's pointless. I want you to be able to educate your people, because when tax season come, I want to see y'all educating y'all people. Like, I don't want y'all coming to me, well, what does this mean? Especially if I'm giving you the whole game off bat. I don't want a whole bunch of 50 million questions, because if I have to go back and say, well, I told y'all about this, so that means you weren't paying attention or you didn't go back and review what I gave you. At the end of the day, being a tax preparer is learning the game. The IRS do not play. Granted, there's ways around them, but they don't play at the same time. So to keep your nose clean and keep your client's nose clean, so they ain't got to go up there and be audited, and you ain't got to be audited, because once you get audited, I'm getting audited. And again, Neona don't want to play with them people, so please don't play with Neona money. Just educate yourself. So you got your 1099 series. So you got non-employee commission, which is payments for made to an independent contractor, which is what you all are. Then you have the rent, which you can do renting out property or equipment. You have royalties, copyright, patents, material rights. Then you have prizes and awards. That is gambling, lottery. That is a 1099G. The other ones I can't think of what their numbers are right now. I want to say the royalties is 1099 INT, but I'm not sure offhand. Then you have your other ones, which are not specifically categorized up in anything, so they become the miscellaneous 1099. All right, so you got your 1099 miscellaneous, which is often used for non-employee commission, which is what you all would get. You have your interest income. A lot of times your interest incomes will come from your banks. So if you have a savings account and your bank has been giving you interest for keeping a certain amount of money in your savings account, then you'll get this paper at the end of the year with your whole total up saying what your interest was on the money that you've been saving. Dividends, same thing, but this one's more closely towards if you are receiving some type of money back to you from a loved one, car accident, things of that nature. Then you have your 1099-R, which is your retirement, your IRAs, your insurance, things of that nature. All these forms are made somewhat differently. So the way the system is set up, each time you go into the system and you click the correct form that you're looking for, it's going to read the same way it's written on the actual form. So don't get confused with, okay, so 1099G looks like this, so maybe 1099 IRA looks, INT looks like this. They're both going to be, the system is set up to read the same way the form is set up. So there may be some blanks on the form, so you leave it blank in the computer. So just fill it in the same way it's set up on the computer. Like I said last week, the forms are, the boxes on the forms are numbered. So the numbers that are the numbers that go with the form in the computer is the same way you put it in. It's basically reading the form, putting it into the computer. Just don't confuse yourself. And don't get me wrong, there's times where the numbers will run into each other, but take your time, review it, put the information in like it's supposed to be. Your supporting documents are going to be any records, receipts, invoices that can basically help you with your itemized, as well as your Schedule C. And your Schedule C is your small business owners. Because you want to be able to prevent yourself from being audited. Because if they say, well, where do you get this number from? And you ain't got no paperwork or even have an idea where it came from, it don't look right to them. So when you have small businesses that don't keep up with their receipts, or don't want to supply you with a bank statement, or haven't really been keeping up with their books, You need them to go through their statements, go through their paperwork, their itemized, and let you know what they spent and where they spent it at. And then you need them to send that to you, because then it needs to be in their writing. It doesn't need to be in your writing. It doesn't need to be electronic. And if it comes down to it and the IRS say, hey, did you supply your tax preparer this information right here? They can't say it's not theirs because that's their handwriting. You have to figure out how to cover your behind at all times. Like I said, your receipts are going to be from their vendors, their suppliers. Then you have your bank statements, anything quarterly or annually that they have gotten for their business, tracking individually in business financial records. Definitely want to keep up with that. And like I said in the first video, if they want you to keep up with it, then it's an extra fee for a bookkeeping fee. We are not bookkeepers. Well, I'm a bookkeeper, but if you're not a bookkeeper, then you don't do it, or you hit them with an extra fee. Because at the end of the day, you keeping up with their receipts and their statements is not your problem. That's not your problem. Your problem is to put the numbers on a piece of paper, come up with the calculation, send their stuff off, and see you next year. That's all you're supposed to do. Now, if you choose to be their bookkeeper, then you let them know this is my monthly fee every month. Don't let them talk you into doing something that you're not being paid to do. Point blank period. Do not let them get over you, because they'll try to weasel themselves in there talking about, well, can you just calculate? No, ma'am. No, ma'am. You can get somebody else to do it, or you can come back to me once it's done. Other than that, I'm not doing it. I got other stuff to do. All right, so the receipts will be your business expenses, like your office supplies, your professional fees. When they say professional fees, it's more like your licenses. Licenses as far as like cosmetology, notary, if they are truck drivers, their CDL license, if they have to do their business license every year, their LLC, things of that nature as far as their professional equipment purchases. If they had to buy anything to utilize to make their business work, that is part of it. If they have to travel for their job, or if they travel to a convention, to a seminar for their position. Like last year, I went to all the different tax forms last year. I'm not going this year. I was bored out of my mind last year. I'm not going this year. Especially since everything that they're going to tell me at that thing, they're going to release it in November. I'm not going to waste $200-300 to go sit there and I'm not doing it. But it is an experience. So don't get me wrong. If you ever want to go rub shoulders with some of those other millionaires, billionaires, and other tax people and get to know them and do some networking, then most definitely go to one. There's several of them. There's even one called ATVP, which is ran by nothing but a bunch of Black tax preparers. And they usually do theirs in Houston. I went to the one in Baltimore and I was ready to come home. But that's just me on it. I don't like people. If you don't know by now, you know now. I don't like people. But that is what it is. Let's see. Then you have your medical expenses. So medical expenses, granted, yes, you can still have insurance and still do this medical expenses, but of course, as always, our insurance does not cover everything. Let me give you, for example, right now, Juju is my support dog, and he is a certified support dog. I can write Juju off on my taxes under medical expenses because he's my support dog. So his surgery is gonna cost me a good $5,000. Guess what? It's getting wrote off next year because he's stressing me out. But that's where I'm going with that. If anything that you have medical, if you had to buy teeth, you had to go get your medicine, and you had to go get crutches, you have anything that you had to purchase out of pocket that was medical, you can write off. Any of your doctor visits, you can write off. Your insurance premiums, you can write off. They don't tell us stuff like this. So if you're paying these things, or if your client is paying these things, then you can let them know, like, hey, if you can give me the amount that you paid throughout the year, then we can write that off. Hopefully get you some money back in your pocket, or get your liability down so you don't have to owe so much. If you're somebody that donates to charities, organizations, cash, property as in far as cars, clothes, furniture, Goodwill, CHKD, y'all know where I'm going with this, Boys and Girls Club, even churches fall into your charitable donations. So definitely, if you have any clients that do that, if they do it, a lot of times they know they need to give you that paperwork in order to write off what they have spent with those individuals. If they don't know, just ask questions just to see if you can help them out with a little bit more, just to bring it down. Your school, that goes back to the 1098T, the tuition fees. There's the qualifying expenses, as well as like if you had to buy a laptop, a tablet, those can actually be wrote off as well. Your home ownership expenses, you had your mortgage, your personal property, any repairs that you had to do on your home, those can be wrote off. A lot of preparers were eating up the solar credit. So they have basically draw that into the ground. So even if you run across a client that has the solar credit, you can put it on there, but it's not going to give them a big credit back like it used to, because a lot of tax preparers screwed us on that one. Then you have your banking income statements. So your account balances, of course, you have your transactions, your interest earned, your dividends, your fees, and your charges. That goes back to what I was saying about as far as us bookkeeping. So let your client know, like, hey, I need to know what your ending balance was for the year. So usually if they're reading their statements in December, well, excuse me, in January, it's going to give them the calculation for the whole year. So they should be able to let you know, like, hey, this is what I spent out. But that's if they have their business and personal separated. Just keep that in mind. But even if they don't, if they can give you an estimate of what's personal and what's business, then you can go by that. But like I said, you have your transfers, your purchases, and your sales made. All right, your filing requirements. You need your income tax return. You need your information returns, and you need your financial statements. And what I mean by that, your income tax return, it's your 1040. Your information return is the information that they have given you to make that. And then your financial statements is going to be what it is if they owe or if they don't owe. So that's where those three come in at. All right, so we went over the deadline once before. Of course, we all think April the 15th is our deadline. April the 15th is not our deadline. April 15th is the deadline for anybody that owes the IRS. They can get an extension that can help them be able to go all the way into October the 15th. So October the 15th is our last day this year. Last year was the 18th, but this year is the 15th. For our clients that have not filed yet, they can actually still file, because we still can do amendments. But if they owe the IRS and they didn't have an extension, they may get hit with a penalty. That's if the IRS has not picked up on it already and start sending out those penalties already. So if you can beat them from sending them out, then hurry up and get your client in there so they don't get hit with a penalty. But like I said, April the 15th is really just for those that owe the IRS. All right, the difference between filing, e-filing and paper filing. We're going to make this short and sweet. It's convenient. It's accurate, because guess what? The computer is doing all the numbers. We're not doing it by hand. We can get a confirmed acceptance from the software within the next 24 to 48 hours. And then technically it is a faster refund, but you don't want to tell your clients that. And I say that because they expect it to be within the 21 days. But we're going to say it is faster because you're not waiting on snail mail for them to get the papers and then put all the information into the system and then them processing it. That's why it makes it faster. But like I said, short, sweet, convenient, reduce the errors, get accepted within 24 to 48 hours, and it's faster than getting their refund done. Of course, our paper filing is traditional method. The documentation, you have to send everything. So if your client sends you a W-2, a 1099, you got to fill out that Schedule C and then give all documentation on how you came up with the numbers on the Schedule C. If you gave them a Schedule H, a Schedule H, then look, it's too much. Like I said, it's a slower process, and then proof of mailing. Like you have to wait for the certified letter, the certified receipt to get back to you for all that. To skip all that, we use electronically cloud-based software. Now, told y'all I was not planning on being up here long. We in 30 minutes in. So let's do this quiz. And I'm gonna let y'all pick who's gonna do it. I know Misty's at work, but I'm gonna let y'all pick yourselves. Or we just want to sit here and stare at the screen because I'm not doing it. Start now. All right. If taxpayers are self-employed with no other income, they must file a return if they had net earnings from self-employment of A, at least 300, at least 400, at least $108.28, any amount, or none of these. Which one do y'all think it is? And no, I didn't go over this with y'all because guess what? It's in one of y'all videos that I've already given y'all.
Is it B? Ayana.
Is it E?
Okay. All right. Taxpayers with 400 or more in self-employed income are required to file tax returns. All right. The custodial parent can sign a form allowing the non-custodial parent to claim their child as a dependent.
True.
Y'all saying true? Cool.
True.
All right. And this is the form that they have to fill out. So it is Form 833-2. We'll go over all of that again. There is so many forms. So I don't expect y'all to remember every last form. I may give y'all a cheat sheet for the forms. I got a lot of cheat sheets and books and all the other stuff that I'm trying to put together for y'all. So I will try. I ain't gonna say I'm going to remember, but I'll try to remember to throw those in there as well. And what I'm making for y'all are physical books. So they're gonna be in y'all welcome boxes. All right, so Taylor separated from her spouse in 2023. Her 10-year-old son lives with her. Taylor signed Form 833-2, allowing her estranged husband to claim her son as his dependent. Taylor pays all the costs to maintain her home. Single, married, filing jointly, married, filing separately, head of household, or qualified widower. So that's my fault. I did not put it on here. But what is Taylor going to file up under? If she's letting her husband carry the child, what does she file up under?
Married filing separately.
Under C. Married filing separately. C.
Y'all think so?
I think I got that one wrong in the video.
Yeah, that's right.
Y'all think it's separately?
Yep.
Taylor separated from her spouse in 2023. So
She's still married though, right?
it's a possibility. But they
So
still
is it married filing joint? Simply
That's
because
what
she
you
was
filed the
married during
form.
that tax season?
She see, we don't even know that whole story.
Well, the video says she didn't want him to have any of her money.
Oh, oh. Watch the video. All right. Yeah, so it can go two different ways, but the way the book has it set up, she's had a household. And what I'm grasping on why they say head of household, because they're not in the household together, even though they were still technically married, they're just separated. I think it really all depends on the state they live in and what the arrangements are with their separation. That's what my guess is on that one, on why they did her head of household and not married, filing separately. But she can still, the whole gist of it is that even though she has signed the form for him to be able to claim the dependent, it doesn't take away her being the head of household. So technically she can still put the child on there, but she just has to mark that the child can be claimed by somebody else. That was the whole gist of it. But I understand what y'all are saying too. So it really all depends. Like I said before, everybody's situation is different. All right. Taxpayers do not have to report their state income tax return if they use the standard deduction the previous year, they claim state and local income taxes as an itemized deduction, they claim state and local general taxes as an itemized deduction. A and C, or all of these? Dang, I wasn't thinking about stomping y'all like that. I know they was off the wall questions, but dang, y'all.
B.
You think it's B?
Yeah.
Okay. Anybody else got a guess for me before I reveal the answer? I ain't gonna do y'all like that no more. All right, so technically it is all of above. So if they have used the standard deduction the previous year, they don't have to file their state income tax the next year. And if they claim state and local taxes as an itemized deduction, so let's say they itemized and they went up under their personal property and their real estate taxes, and they used that tax information that they did for the state, they actually don't have to even file the following year, but they can if they choose to, if they're getting money back from the state. I know it's a lot to remember, but I promise you, once y'all start doing it, it's gonna start making sense. See, that wasn't that bad. It was short and sweet this week. I just had to get it out there so we didn't have week 3 and week 4 running into them. Well, week 2 and week 3 run into each other. So I just had to cram it in there some kind of way. But how is everybody adjusting and feeling? Like, have y'all had a chance to actually look at y'all's guide and do some of the self-paced work?
Yes.
Well, Tiffany, I know you have. You don't talk to me about the video.
I haven't yet.
Okay, Miss Carter, you got to tighten up, Miss Carter. Even though you just got here 2 days ago, you got to tighten up, Miss Carter. Okay, well, it's going to, like I said, it's going to click once y'all start actually putting stuff together. I may give y'all another task of putting in another return just so y'all can get a feel of it again. I just got to find one that I think might be a little bit more advanced than the one that I gave y'all at first. Just to see how y'all play it out. Because that first one, everybody got the same answer. So that wasn't fun. Like, I couldn't pick nothing apart because all y'all got the answer right. So what I think I probably do because a lot of people have side businesses now, and small businesses. I probably will give y'all this next one's gonna have like a Schedule C on there, so you'll have to be able to put the Schedule C in and do the child tax credit. Yeah, so this is what this next one's gonna have: a Schedule C. They're gonna have children, and they're gonna be in school. They give y'all enough forms to put in to keep y'all occupied for a little while. I think so anyway. I don't know. But other than that, do y'all ladies have any questions for me? Or have any requests from me? Because y'all know I be spreading myself thin. Just like when I get off here, I need to do some homework. But I am available. Y'all know I keep my phone somewhere close.
I got a question, but it don't have nothing to do with this training that we just learned. It's actually something else. You said as preparers, we weren't allowed to file our own tax returns.
No, y'all can file your own returns.
Okay, that's my only question.
Yeah, y'all file your own return. I'm not doing it for you. But I know my first year, I didn't want to file my own return because I had 2 businesses, 2 kids. Yeah, it was too much for me. And I went to school. I was like, I don't want to deal with all this. So I paid somebody else to do it. And then last year, I paid somebody else to do it. This year I did my own though. So it's really up to you. But y'all are free to do your own taxes. Like I'm not gonna say I can't. Y'all know what y'all supposed to put on there and what you're not supposed to put in there.
So do we set our own amounts for preparation fees, or do you set that?
Nope, I set up a minimum fee and a maximum fee. And then from there, y'all determine what y'all fees are. Because at the end of the day, just remember, whatever you set your fee to, you get 80% and I get 20%. So just make sure that you setting it where you still can get your get off on yours and don't have to worry about nothing. And the reason why I'm doing 80-20, because my other 2 ladies that have been preparers before, they know 80-20 is not seen in the tax world. It's usually 60-40 or 70-30. I didn't want to do my tax preparers like that, so I did them at 80-20. But we'll go over all of that when we get a little bit closer, because I'm gonna have y'all go through the actual have y'all go over a return with me, and then I'm gonna go over how the fees are calculated at the end. Because I didn't have them set up the last time we went through the slide, but I have them set up now. So when we get a chance to, I'll go through that with you all over again. Other than that, y'all are free to go if y'all don't have nothing else from me.
Hope you guys have a good night.
All right, ladies.
Thank you, ma'am.
Y'all are welcome. Y'all ladies have a great night.
You too.
You too, Mrs. James.
Good night, Miss Carter. Excuse me, Miss Barney.
Thanks for the correction.
My apologies.